The Labor Department admitted that the numbers were not accurate, and yet they are still being reported as if they are. The media is running with it anyway. No surprise. The foolish trolls have gathered around their dark corners of Robinhood to buy the next bankrupt company. The Fed has encouraged massive risk-taking, but being careful to suggest anything of the sort. Unlike in previous times where the words irrational exuberance were allowed to be uttered, today they will have nothing but blatant propaganda. You came here for the truth, so let me unveil that for you. Welcome to the channel with the dwindling views and the fleeing subscribers. I want to thank all of those who have joined me today. There's a lot of information I need to get into, specifically the fake unemployment number. There are only a select group of people who actually care about the unemployment numbers, who actually care about the statistics that are not valid, that are being manipulated, and I want to thank you for being one of the few. I've reported on this before, and I just wanted to show you this. It's from a little while ago, but an article out of Forbes actually got to the situation that I'm talking about today. Don't be fooled by official unemployment rate of 14.7%. The real figure is even scarier. Now, while this is a contributor here, you get this small sliver of hope, but the vast majority of the mainstream media still refuses to acknowledge what's actually happening with unemployment, with the jobs numbers, with all of these different statistics that are designed to ensure that you don't know what's actually going on. And that is sad and that is desperate. I have done video after video after video about the unemployment numbers, about the jobs numbers. You could see right here, if you go to a search engine and type in fake unemployment rate, the money GPS, you will see on here 3 of the 5 that are coming up in this list are my videos, and they break down exactly what's going on. I'm going to show you updates to that today, but if you want to know all those details, you can do the same thing. Go to a search engine, fake unemployment rate, the money GPS. This is directly from the BLS.gov website. You are not getting this from CNBC. You're not getting this from Forbes. You're not getting this from me. I am reading directly from the source. If you want to read it for yourself, it will be in the description under the sources section. In the household survey, individuals are classified as employed, unemployed, or not in the labor force based on their answers to a series of questions about their activities during the survey reference week. In this case here, June 7th to June 13th. Workers who indicate that they were not working during the entire survey reference week and expect to be recalled to their jobs should be classified as unemployed or temporary layoff. Okay, you got that so far? In June, a large number of persons were classified as unemployed or temporary layoff. As was the case in March, April, and May, household survey interviewers were instructed to classify employed persons absent from work due to temporary or the crisis of 2020 related business closures as unemployed on temporary layoff. BLS and Census Bureau analysis of the underlying data suggests that this group still included some workers who should have been classified as unemployed on temporary layoff. To translate that into English, just like in the previous months, there's a group of people who should have been on the unemployment statistics but are not. That's it. End of story, directly from the BLS.gov website. Here they do admit that that percentage has declined, but it's still there, it's still present. They actually say in here that they will not adjust it. They've been making this mistake over and over and over again, quote unquote mistake, but they will not change it due to keeping integrity, quote unquote integrity in the data, which is an absolute nonsense joke. How many of these statistics are the same way? We're finding out about this one here, but how many of the others are like this? I have a feeling a lot of them. High-frequency data assembled by Federal Reserve officials, economists, cell phone tracking companies, and employee time management firms suggests activity slowed in recent days, clouding a strong U.S. unemployment report that may prove to have been driven by an exuberant start to the month as states reopen. Some of those reopening plans, though, have been put on hold, new restrictions in the bars, restaurants, and so on. Essentially, what they're saying here is that they're measuring all of this based on the data prior to the states closing, or I should say reclosing. So therefore, we won't really know until the coming weeks to determine what's happening here. I'm sure you've already seen the numbers for yourself, but I wanted to include them here. US unemployment fell to a hilarious 11.1% in June as the economy added a solid 4.8 million jobs. We all know the truth. We all know what's happening here, but they're going to report 11.1% until the next one, which probably will go down below 10, and the stock market will rise as a result. So you don't need reality anymore. All you need is high frequency traders, computer algorithms, Fed fiat confetti currency, and other fairy tales, as long as that makes your 401k go higher. The disruptions that these cause, the dislocations and disasters that result from this, forget about that. That's pessimistic. That's negative. What we need to focus on is getting this number lower and right into the negative. I will not be satisfied until the interest rates go into the negative and the unemployment rate. I want to see that unemployment rate below zero. That's the only way I'm going to get any satisfaction. I want that printing press to be running at full speed forever. I want $250 printed every single day. Let's make it happen. USA, USA, USA. Irrational exuberance all the way. I just wanted to note this also. Those on temporary layoff fell by 4.8 million in June to 10.6 million after a decrease of 2.7 million in May. So I'm just tracking all the aspects of this, and we will see what happens here as time goes on. This is just a chart that's associated with that, and you can see that the numbers have begun to slow, and we can expect that this will continue for the next little while. This is a breakdown of jobs added by industry, May 2020 and June 2020. So you can see the difference here right at the top of the list. Leisure and hospitality, of course, with the restaurants, with the bars. That has been the primary factor here. Some of these are closing down now. A lot of people getting laid off again. We know the drill. This is the expectation coming for so many different places, in fact. But we're going to have to simply play it by ear as we move through this. This is another breakdown just showing you all the different sectors. Top left, amusement, gambling, and recreation industries plus 43%. What is important to note here, number one, not just those at the bottom, like mining, rail transportation, and so on, that are continuing to decline. That is worrisome. But for these places like retail, for instance, for many, it's going to mean never opening up again. And that really hurts a lot of people. I believe it's this article here that gives you a breakdown so you could see where the jobs are or are not. So you can read that for yourself if you're interested. Link in description. They made these 2 points down here that I wanted to note. One economist said that the road to total employment recovery may take years for certain sectors, or worse, never occur. Employment in clothing stores is up 202,000, but it's still down 40% compared to last year. So of course they're going to report the 202,000 here, but they're not going to tell you about that 40% drop year over year. Look, so many of these places aren't going to reopen. Retail is a massive industry, and while in many cases doesn't provide good pay, there are certainly a lot of jobs surrounding it, and that's very worrisome considering what we are seeing today. Bouncing back, percentage change in employment you could see from January 2019 to June 2020. At the very top, in positive territory, couriers and messengers. We know what's happening. People shopping online right here. Massive surge in this case. More and more jobs in this industry. There's no doubt about it. But you look at coal mining, bars, restaurants, clothing stores. All of these are down year over year. America's recovery from the recession could last through the better part of the next decade, and that's according to the CBO. The forecast is riddled with uncertainty in terms of the conditions that they are seeing throughout 2020, changes to consumer behavior, and policy responses. The CBO now forecasts the unemployment rate will remain above where it was here in 2020, which was near 50-year low of 3.5% until after 2030, the end of the current forecasting range. The 10-year average unemployment rate will be 6.1%, up from 4.2% projected in January. And if you can believe it or not, it will take until 2028 for the GDP to grow in line with the long-term trend growth again. How in the world are they ever going to get it back when they have what happened in 2008? It struggled to get back, never did, and then we have this. Who knows where we're ending up here before it has to come back up. They're saying 2028, but if history is any guide, it's not going to happen. Japan's middle class is, quote, disappearing as poverty rises. We keep hearing about the success of the Japanese model. Print, print, print. It will save you. And here you can see very clearly that isn't working on so many different levels. You have a very serious demographics problem, but looking at it specifically from an economic standpoint, they've got serious hurdles, major obstacles that face them today. They own everything. The government, the central bank, owns the entire country. All of the real investors have fled. You've got a very worrisome issue here today, and it cannot be reversed by more of the same. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. One click of that button helps me out. Thank you very much. If you want to check me out on Instagram and Twitter, you can do so at The Money GPS. Do you want to know how to sell stuff online? You want to understand e-commerce? Well, you can go. There are countless courses out there available to you for $1,000 plus. Or you could join approximately 7,500 people all around the world, learn for free at the AmazonGPS.com. If you want to understand the financial system from top to bottom, A to Z, I have the absolute best books you're going to find on these topics of the foundational information, the history, the asset classes, everything in between. You can get that at the link in the description. If you want the audiobook, themoney.gps.com. Wait a second, don't go anywhere. You've got to watch this video. This one is very important. Definitely want to check it out. Click it. I'll see you there.